Here we go. I would love to know where all of you are joining us from today because as I was just saying, we typically reserve our workshops for 10th House members only. So today is really special. We're opening up a workshop to our entire community. So we have people joining us who have never joined us before. This may be your first ever Female Founder Collective or 10th House event. So I'd love to know where you're joining us from and if there's anything specific that you were hoping to get out of today's conversation, because we are going to take questions at the end. So if there's something that you're thinking to yourself, oh, Avery, if this question doesn't get answered, I'll be really disappointed. Please pop those into the chat now, along with where you're joining us from. I'm joining you all from Denver, Colorado. And for those of you who don't know me, because like I said, many of you are new here, I'm Avery Bradford. I'm head of programming and events for Female Founder Collective and the 10th House, which I'll share a little bit more about because many of you aren't members. So Female Founder Collective is a wonderful fund. We are able to give grants and scholarships and educational opportunities to female-founded organizations. And through Female Founder Collective, we actually have a private membership community called the 10th House. And if you are all interested in getting access to all of our resources and workshops and events like today, would love for you all to join us inside of the 10th House. You can apply to this cohort by July 18th or June 18th to get inside of that cohort. And we are now welcoming tech founders. So if you are not in tech industry, I would look forward to maybe applying at a later date, but would love to see all of our tech founders joining us here soon. Like I said, resources, workshops, networking opportunities, both in person and online. But something that's really important to us, both inside of the 10th House and as a larger organization from a Female Founder Collective perspective, is partnering with organizations who have a similar mission to us, which is how today's conversation came to be. Female Founder Collective is so thrilled to partner with Settle, who's hosting today's conversation, to further elevate female founders. Settle has a mission to power CPG economy with cash flow tools, and Settle levels the financing gap for women-owned businesses with Settle Working Capital and provides an accessible and powerful financial platform designed for CPG brands ready to scale. So if you're thinking to yourself, I'm very excited about this conversation, I want more, don't worry, because Settle is dedicated to influxing more women's perspectives, inclusive brands, and goods into consumer ecosystems, and proudly serves brands like Soft Services, Dagny Dover, which we're obsessed with, and Gia, another one we're obsessed with. If you've been to any FFC events, you've probably seen Gia there on the bar. But as a part of their commitment in empowering women entrepreneurs in CPG, Settle is partnering with us at FFC to offer a 3-part financial fluency workshop series, along with a couple of downloads. So if you want instant access to financial solutions, I really recommend that you download those resources when they're available. Check on the 10th House website and our educational page, and you'll be able to access those there. But following today's event, we actually have 2 more events coming up this fall where we'll go deeper into scaling. So anything from inventory and purchase orders to all of your financial operations and beyond. So like I said, today's conversation means a lot to us, and we really want this to be beneficial for everyone joining us today. So if you do have any specific questions, pop them into the chat. I want to make sure that Kristen gets to those at the end, and I'll actually be moderating those. So I'll be keeping track of those in the chat. And Kristen Miller is going to introduce herself here shortly after going over today's agenda. But once again, just very excited for everyone here to be able to join us live. And if you are a member of the 10th House, don't worry. This event is being recorded, and we will share it out to the community after today's workshop. So without further ado, I'm going to pass it over to Kristen and start monitoring the chat to get all of your questions secured. So Kristen, I'm going to pass it over to you.
Awesome. Well, thank you for that, Avery. Yes, as Avery shared, we are very excited that you're here today. So we're going to jump right in. Now, I want to be really clear and upfront about what I'm going to deliver and talk about today. This presentation will not be about how to manage your specific cash flow. Now, assuming that your growth is at a point where cash flow management is sensitive and needed, which we will talk about, you should really hire a professional for cash flow management itself, because there are a lot of variables to consider. Several of these variables will be covered today, and it will become more clear why a professional is best fit for this. We're going to dive into variables, which we'll refer to as building blocks, that contribute to your everyday cash flow. We'll talk about how to handle these areas to help cash flow management off the bat, establish process and tech for efficiency, and even nurture relationships for growth along the way. All right, so let's jump right in here with cash flow management, the keys to successfully scaling. In a more formalized version, here's our agenda for today. We'll jump into what cash flow management is and why it's important. We'll walk through a visual timeline for a cash flow conversion cycle. Then we'll get into challenges of cash flow management for female founders, the building blocks contributing to your cash flow, and their respective challenges. Then we'll wrap up with strategies and summarize with takeaways as a whole. Now, before we dive in and you get to listen to me talk all things cash flow for the next hour, let me take a moment to tell you a little bit about myself. First and foremost, I have a little bit of a cold, so if I sound a little nasally today, I apologize for that. Hopefully we won't get any sneezing fits in the middle here. But my name is Kristen Miller. I live just outside Fort Worth, Texas, and I love my home state. I was born and raised here, where I met my husband, actually working at Texas Motor Speedway, where we each gave tours, sold tickets, and ran the gift shop. We now have two amazing daughters we often take back to the racetrack for events. And I would not even call us race fans, honestly. We just love the track itself. It's nostalgic for us. We had a lot of fun working in there. And there's just something exciting about how the track comes to life when these people gather there again. But anyways, moving on back to the topic of the actual presentation here. I've been in financial operations for over 12 years. I've worked in several different areas of accounting, from focusing on AP and payroll only up to full cycle and managing a team for month-end close. Most recently, I ran the solutions department for a firm where we plugged in fintech to service areas of financial operations, which helped both external customers and internal accountants with efficiency and quality as a whole. Now, I've stepped into a partner success manager role with Settle, where I work with accounting firms to serve their needs through our bill pay application, which also supports purchase orders, three-way line item matching, and working capital. It's a particularly strong solution for this consumer packaged goods industry, but the bill pay itself is what drew me in. There are just some big players out there now in the bill pay world that make things harder than they have to be sometimes, and Settle just doesn't do that. It's easy to use, it's intuitive, and it's cost effective. I also have an LLC of my own that I run projects through on the side, where I provide consulting, help with system migrations, and set up financial operations solutions from scratch. So think of bill pay, invoicing, payroll, things of that matter. Regardless of the role I've been in, process and tech have always been consistent themes to drive growth. Although I will say I'm fairly burnt out on the accounting pieces themselves, I still see growth opportunities for the accounting industry and the businesses they serve. That's what gets me pumped. Helping others utilize financial operations to grow their business, themselves, their team, customers, vendors, you name it. And that's largely why I'm here today. So let's jump in. What is cash flow management? Cash flow management is the process of tracking, analyzing, and optimizing the amount of cash inflows and outflows, ultimately to ensure liquidity and financial stability. So let's break this definition down to the tracking, analyzing, and optimizing pieces. In order to track financials, you have to have this information entered somewhere first. So it'd be in your books or your accounting software. This tracking is the data entry and posting to the books, utilizing process and tech along the way. You can think of analyzing as your reporting. Your data is posted to the books, so now you need to be able to report upon it as a whole for understanding of the data, trends, and relationships. While you can technically do the reporting on your own, that doesn't mean the reports are necessarily right. So to ensure validity of your reports, it's really important, excuse me, that a professional is closing your books at the end of the month. This means they're reconciling accounts, so adding financial data that may have originally been missed or removing pieces that were entered incorrectly. If your books are on an accrual basis, then you need journal entries, essentially to align transaction timing as well, or your reports can be misleading. Optimizing is where the understanding of not only your process and data is important, but also industry trends, economics, and even regulations are important. This is where the need for a professional comes in. The needs and complexity of cash flow management itself varies greatly from business to business based on the industry, accounting methods, team size, processes, workflows, tech stack, and so much more. Talking about the process of cash flow management itself would get very complicated very quickly, and that's why I highly recommend you have a professional in place for this piece. This professional could be an in-house accountant, a third-party accounting firm, CPA, or even a fractional CFO. Whoever it is, it needs to be someone with an accounting background who's very in touch with your financials, your trends, your team, and your processes. So why is cash flow management important? Why are we even talking about it today? In short, cash is queen. It can truly make or break your business. In the definition, we talk about how the goal is to ensure liquidity and financial stability. Liquidity being the ability to meet payable obligations, like paying vendors, paying your employees, or other operational expenses. This is basically keeping the lights on for your business. Financial stability refers to how a business operates in a predictable, reliable manner without major disruptions. This is crucial for weathering economic downturns or unexpected events, which commonly lead to unexpected expenses. This financial stability is what allows your business to grow, so you can hire more people, buy more supplies, or maybe purchase equipment or tech to improve the rate at which you conduct business. This stability also equips you for data-driven decision-making, reduces how much you have to depend upon debt, and in turn, prepares you for those unexpected expenses. When you don't have healthy cash flow management practices, which is what we're focusing on today, you're either walking around in the dark or straight up scrambling. It's hard to figure out where money's going to come from to pay bills. It's hard to understand how long that money will last you through slower seasons. Or better yet, so you can set effective sales goals to know what you need to bring in revenue-wise to not just offset those expenses, but still profit for growth as a whole. Without cash flow management practices, it can be hard to understand where your true profitability comes from, making it even more difficult to make educated decisions, much less share that information with your investors. Tracking, analyzing, and optimizing your cash flow management process is really what's going to put you in the driver's seat for your business. If that's not enough to show the importance of cash flow management, let's talk about how 82% of business failures, are due to poor cash flow management. Or for small businesses who are up and running, how 61% regularly struggle with cash flow management. And of that group, about a third have been unable to pay vendors, loans, employees, or themselves at least once due to cash flow issues. There's a lot of moving pieces to consider with cash flow management, to the point where it's almost like a balancing act with inflows and outflows, and timing is crucial. So let's talk a little bit more about that timing and why it's so important to cash flow management. We are coming up on summer, so let's use the rest of this year as an example for a consumer goods business. You know that busy season is primarily during the holidays. And once you get in that season, whether it's just you or you and a team, operations is already ramping up and has a lot to handle at that time to get goods out the door. That means you won't be able to focus as much on preparation of these goods. So think about having them in-house as inventory ready to sell. Procurement needs to be done in advance to ensure you have the goods to last through peak seasons. If manufacturing has to be done for your goods, there's another layer of timing and expenses to work into the equation. Then shipping, customs, and freight, which again includes the operational time and handling of each, and the expenses that come with. Generally speaking, you could expect to have these ordered goods in hands, let's say 3 months in. That's 3 months where your business still has to be running and handling the day-to-day sales, expenses, and operations. Although you are preparing for a prime time to capitalize on for sales in the future, today doesn't stop. And at this point, you haven't earned revenue for those goods that you purchased 3 months ago. This is a prime example of why you have to have healthy or at least well understood cash flow in order to sustain business through these slower times. All right, we've seen a snapshot of a cash conversion cycle at this point, showing the delay in receiving revenue and ultimately highlighting why cash flow planning is important. Although no, we're not diving into how to manage that cash flow specifically, I do want to take a moment to talk about a big picture cash flow challenge for female founders in particular, and share a helpful resource. Now, I'm sure most of you are well aware that one of the most common cash flow challenges faced by female founders today is funding. When you're getting started, you often need a cash infusion to get things off the ground. This could be for the purchase of goods, subscriptions, employees, you name it. Women receive only about a quarter of venture capital funding today and are only half as likely as men to receive a small business loan. Now, I hear this and my head goes to, okay, well, how many women founders are in this total group to where only a quarter of those receiving venture capital funding are women? What does that look like? That I admittedly don't have in front of me. But to support and show on the flip side of that, there is data to show that venture capitalists tend to fund businesses they feel connected to, but 89% of investors are male, so that makes it a little difficult. I think this is one of those situations where awareness of this info will help over time, so we need to keep talking about it. But today, what are female founders supposed to do about needed funding? Do we just put up with it and weather through the storm? Well, yeah, sometimes. That's also just part of the startup world and what a lot of people have to do. But there are other options. Working capital has been a great option to settle customers. We have a customer, Ladybird Provisions, who provides nutritious coffee. They were self-founded and their cash conversion cycle was tight, similar to what we just looked at. During some cycles, they were purchasing ingredients and making products 3 to 6 months before realizing revenue for it. They needed funding, so they turned to settle working capital and didn't have to fundraise. Through a platform that easily integrates for bill pay, Ladybird Provisions was able to extend their cash runway by 6 months, ultimately supporting 70% revenue growth. Then, when it comes to paying back that working capital, they have the flexibility of using an amortized repayment schedule instead of lump sum payments only. They were able to fund large purchases for sales while using their own cash reserves for other vital business expenses without the stress of fundraising or having to give up equity. If funding is something you're considering, I highly recommend you take a look at this case study to understand how our working capital has helped others. All right. contributes to your cash flow as is? So talking about these building blocks, here are some of the basic building blocks that contribute to your cash flow. At a high level, think of money. Is there more to consider than just these building blocks? Yeah, absolutely. Needs and regulations vary from industry to industry, so there will be different combinations of these blocks and more. But these are some of the most basic and consistent pieces that play into your business cash flow. For each of these, it's important to establish your operational process and your accounting posting process. An operational process is the step-by-step breakdown of how things are done. You can think of this as your standard operating procedures. The accounting posting process is how these transactions that came out of the operational process are reflected in the books. Most people tend to focus on operational process, then pick up the accounting later, but marrying the two is a game changer. Aligning your operational and accounting posting process for each of these blocks is what will benefit not just your cash flow, but your business efficiency and understanding as a whole. Even business relationships. Combining these two processes, so that operational and accounting piece, is often known as financial operations. Remember when I said we'd focus on the tracking piece and the definition of cash flow management? That's the data entry and posting to the books. So the accounting process, ideally aligned with operational process. This is where tech comes in to leverage the two and yield results. All right, now that I've talked all around these building blocks, let's talk about them in particular, more as the keys to success. On the first level, we have accounts receivable, so money coming in from customers. This is how you request money from customers in the form of an invoice, how you receive that money, how you continue to follow up on late payments, and the recording of it all. Above that, we have accounts payable, so money going out to vendors. This is how you request orders from vendors, how you pay them, and how members of your team can make daily business purchases to conduct business, using a corporate card as an example. Then we have payroll, which is also money going out, but with inflow stakeholders, your employees. To top it all off, we have reporting, which really can't be done until your books have been closed for an accounting period, typically monthly. Now, I see each of these as an opportunity to combine operational process and accounting process using tech to streamline and even nurture those respective relationships by improving their experience with you through ease and insight offered by the tech that's in place. Does that mean you need a different piece of tech in place for each one of these blocks? No. There's a lot of awesome fintech out there now that will address a handful of these within one fintech solution. Now, I'm not saying there's a one-size-fits-all. That sounds dreamy, but you can definitely batch some of these together. And if you have an accounting professional in place to help you manage your cash flow as a whole, specifically one who's working remotely, which typically indicates they're tech savvy, then I'm sure they have fintech recommendations as well. They often get better deals on these subscriptions and processing rates too. So I'd actually recommend that you partner with them wherever possible to utilize fintech for these areas. On the next slide, we're going to talk about common challenges to each of these blocks and strategies to address. But I want to call out the fact that I intentionally left reporting out of this, because this is something I'd recommend you have a professional for. Does that mean every single one of you needs to have an accountant doing your daily bookkeeping, your reconciliations, your month-end close, and cash flow management as a whole? Even those of you who might be a one-man show right now? No, not at all. It sounds great though, doesn't it? So does money growing on trees, but that's just not how things work. I realize this isn't feasible for everyone, and that's why we're talking about building blocks to help cash flow along the way, focusing on accounts receivable, accounts payable, and payroll. For those of you that have cash inflows and outflows, for those of you that have more cash inflows and outflows than you can keep up with, you're probably on an accrual accounting method, in which case a month-end close is more fitting to be done by an accountant. But if you have a general grasp on your inflows and outflows, have pretty clean processes in place, and know how your money typically moves, then I would be willing to bet that you're on cash basis accounting method, and you may not need an accountant yet. Now, it's not that black and white, and it is common for businesses to outgrow cash basis and need to move to accrual basis. So if you're questioning this, that's your sign to, even just at bare minimum, explore and talk to an accounting professional. All right, here comes the fun. Let's talk about the challenges surrounding these cash flow building blocks. Then we'll get into strategies to approach and solve for each. But more than just solving the surface level challenge at hand, we'll talk about how to put well-rounded solutions in place for your business within goals of, yes, helping positively contribute to your cash flow, but also utilizing tech and process for consistent quality and efficiency, and providing a better experience for the business relationships at hand. So what kind of problems are common with accounts receivable? Inconsistent sales and cash flow. As if seasonality and marketing efforts weren't enough on their own, in the world of financial operations, there's also late payments that disrupt expected cash inflows that you might be hoping for based on sales. Then there's credit risk management. So extending credit to unreliable customers, potentially increasing a bad debt expense to collect. Then the actual manual collections process itself. This typically includes inefficient follow-ups, backtracking, and overall higher administrative costs. How do we address these challenges? Make it a priority to set up automated invoicing and reminders. This can usually be done by your accounting platform natively, but there are also third-party apps that allow you to send electronic invoices with respective automated payment reminders. Or set up customer portals that allow customers to view and pay their invoices online on their own time. This gives them visibility into payment status and the ability to self-serve, increasing your own efficiency and building trust through a better customer experience. This one can be tougher, but if possible, set up credit scoring upfront to screen clients you're considering giving net terms to. This mitigates risk by evaluating customer credit worthiness before extending those terms and potentially being on the hook to chase down those funds later. Then we have cash application automation. This one has been tougher to solve for in the past, but seems to be getting easier to find a fintech system for, as AI is being embedded left and right. This cash application automation is using AI to match payments to invoices quickly once they hit the books. This allows you to more easily keep customer balances straight and break down deposits with respective fees. All right, now let's jump into accounts payable. Common challenges to accounts payable include, first and foremost, bill processing delays. This is the manual handling of bills that can more easily lead to errors and delays in approvals to get payments out the door and into the hands of your vendors. If you are still receiving physical paper bills by mail, I'm coming for you on this one when we talk about the solution. I mean that in a tough love kind of way. We'll come back to this. Another challenge is truly optimizing your cash flow by balancing early payment discounts wherever possible. But don't forget about the balancing act of cash flow itself. This one's tough and has to be balanced with maintaining sufficient cash reserves for required expenses. For what it's worth, I don't think this one is easily achieved without having a granular grasp on your cash flow management, ideally with an accounting professional in your corner. Then we have supplier relationships as a whole. When you have delayed or late payments to a supplier who has little to no insight into the status or history, then it can damage your supplier relationships, making it harder to manage future operations. To address the bulk of these challenges, I recommend you start with a cloud-based bill pay system, which is why I'm coming after those of you who are still receiving checks by snail mail. In reality, I kid. I realize sometimes it's more important to get things moving roughly than not at all. So it is what it is. But if you are receiving bills by snail mail, this is your sign to request your vendors electronically email you bills from now on. I recommend you set up one dedicated email address to receive bills only. It's standard for bill pay systems to include an inbox with a dedicated email address. So everything that hits your bill's inbox, you can set up an automatic forwarding rule to send all bills to your bill pay platform. This move empowers your accounts payable with process and tech. Again, I personally think Settle's a great solution for this bill pay use. Before I joined the Settle team, their application was my go-to recommendation for clients who needed an easy solve for AP. It's intuitively easy to use, it's easy to train upon, it integrates to the books seamlessly with an automatic two-way sync. The support and team has been incredibly responsive and helpful in my experience, and it's less expensive versus other bill pay applications I've seen. In the seat I'm sitting in now, yes, of course I'm biased. But even before then, the move to Settle has always been a no-brainer to me. Regardless of who you go with, your bill pay system generally should have AP basics like a dedicated inbox email address for email forwarding of those bills, approval workflows on the bill entry and the payment level, so you can make sure legitimate bills are being entered for payment to be reviewed by team leaders, and then OCR document recognition to easily pull the text details from your bills to your cloud-based AP system. Also, supplier portals and linking is a must. This is the piece that gives your suppliers insight to outbound payment status and even lets them enter their own banking information to reduce error in receiving payment, and also give them process control ability on their side. Now let's jump into our last piece here, payroll. Payroll offers its own set of fun challenges with compliance and regulations. This means keeping up with changing tax regulations and labor laws, plus risk of penalties due to non-compliance. There's also cash flow timing, which generally refers to the frequency at which you process payroll and issue payments to your employees. Misalignment between pay periods and incoming cash flows can strain cash flow when receivables are delayed. This one isn't really flexible when it comes to timing, as you have to set a standard payroll frequency. So weekly, bi-weekly, monthly. So it's important you understand your cash flow up front or cash flow trends for your industry at minimum, so you can align as early as possible. Then we have data security that comes with personal information. This requires protecting sensitive employee data, creating risk of payroll fraud or data breaches. Luckily, there are several great pieces of fintech to handle payroll. Depending on the details of your payroll, some will even run automatically and post to the books automatically. That ideal combo for financial operations. If you're looking for a one-stop shop to also have this fintech handle your payroll taxes, then be sure to be on the lookout for a PEO. This is a professional employer organization, which basically makes them full service HR resource to even help with your benefits administration. Compliance tools and communication, direct deposit processing, and data security are all very common staples among these PEO systems. All right, now that we've talked through these building blocks and how to generally approach solving for each, let's look at some common themes, which shouldn't be anything new to us by this point. We've got operational and accounting needs coming in to create these challenges, then are driving the process through tech to provide solutions, where the end goal is a consolidated process, maybe even automated altogether, to both yield efficiency and quality data posting to the books, speeding up the movement of money and empowering your cash flow insights. Then we have the relationships that are affected in each piece: AR with customers, AP with vendors, and payroll for employees. Plugging in effective tech is also building better experiences for each of these relationship types and empowering them with knowledge to build trust and overall partnership for future interactions. All right, so to wrap up here, we're just going to go over summarizing points. We've got 4 major takeaways, which is utilizing the technology and process, so offering automation and strategic opportunities to better manage your cash flow and nurture relationships. Then we've got basic building blocks of cash flow management to focus on. This is our accounts receivable, accounts payable, and payroll. Then we have month-end close and reporting for beginning to analyze cash flow management. And again, if you're at a point where your cash basis, you understand your cash inflows and outflows, how your money is generally moving, and the processes that go with it, you may not necessarily be at a point where you have to have an accounting professional for this piece, but it definitely helps. And if you are accrual based or any of those pieces mentioned before, having a grasp on your processes, how your money's moving, whatnot, if you're unsure of any of those, I recommend you just at bare minimum, have a conversation with an accounting professional. And then our 4th point here, wrap up, is a professional should build upon that analyzing. So that's where they're coming in for the cash flow management, to really dive in deeper to understand your financials, your trends, and plan for the future, so you can truly utilize cash flow management. And with that, I am going to hand this back over to Avery so she can moderate the questions that might have come in.
Amazing. Thank you so much, Kristen. That was fabulous. I'm really excited to take your questions. So we had over 300 people RSVP for today's event, which means we had a ton of questions come in because you all had the opportunity to submit your questions ahead of time. So I'm going to go through those as well as ones that come in live. So if there was anything that was discussed today and you're thinking, how does that apply to maybe my industry or my brand or the stage that I'm in, you can ask those questions. If not, I'm going to go ahead and go into the ones that you all sent in ahead of time. So one that Samantha sent in today is, where can we find the Ladybird case study you shared? Is that public at all?
It is. So actually, Avery, are we going to be sending out the slide deck afterwards?
We can, yeah, we'll share out the recording and we can add the slide deck to that as well.
That
Oh,
would
and
be
I see
awesome.
Sue added a link to the case studies.
Yes. Otherwise, if you want to go to Settle's website, and then you'll see resources at the top of our page where you can choose customer stories. And that's where all of our case studies, as well as the one in today's presentation, are listed.
Okay, perfect. Thank you. All
Yeah.
right, the next question is from Katie, and that is, how does cash flow management differ from simple P&L statements?
Ooh, that's a great question. So a P&L statement is definitely a part of your cash flow management and a really important report to understand a snapshot, essentially, of what's going on in your business, but it is not the full scope of cash flow management. So a P&L actually is really good for looking at a month that has been closed and then even comparatively looking back so you can compare months side by side. But as far as the future, it doesn't do a whole lot for you there. Now, if you bring a professional in, you can have them forecast, and a P&L is definitely something that they will use to help look at that future picture. But surface level P&L just doesn't necessarily give that full scope.
Super helpful, thank you. This next question is from M, and that is, can you really plan for cash flow management when your sales are so varied in the early days when you're not consistently generating revenue?
I would say early days when you're still working on generating revenue, I would not sweat cash flow management too much. Make sure that you are organized, you understand, what those potential sales coming in. You also understand what expenses you have to pay. So that'll tell you how much you need to raise those sales so you can break even and eventually make profit. But I would say just starting out, yeah, focus your energy on bringing in those sales. That way you have those moving pieces and you'll be excited when things get chaotic and you need cash flow management.
Amazing. This next question is from Khadija, and that is, how do I manage cash flow when I mostly get paid on net 30 terms? And for those of you joining who may not know what net 30 terms are, it just means a customer has 30 days to pay their full invoice.
Yeah, so that is tough. I mean, at least in that situation, you do understand there's some consistency in net terms, but obviously they're going to be staggered over time. I think in a situation like that, it's better to look at what you can do to help with that income coming in. So instead of the big picture of cash flow management, looking at, okay, how can I make this revenue more predictable or maybe collect it quicker? Because that's what's going to equip your cash flow management as a whole. Some people will offer discounts to people who will pay early. That gives your customers incentives to pay you and help get that money in the door quicker.
Interesting. Okay. Joshi and Allison have questions that are similar, so I'm going to kind of lump them together. And Joshi's is, are there any cash flow tips that help you become profitable more quickly?
Oh, that that's tough. I wouldn't say there's one necessarily across the board to help you become more profitable quickly. I think it goes back to the basics, and I don't think I'm saying anything that anybody here doesn't know, but trying to keep your bottom line expenses low and then really focusing on getting consistent revenue. And that's tough because that looks different from industry to industry, business to business.
That's fair. Okay. And this next one is from Allison, and she actually has two questions. And the first one is, what metrics should I focus on in the early days? So what are those, KPIs or numbers that are really important for a newly launched founder?
Um, Again, it really depends on your industry. Metrics are going to be different. But I would say, just to generally help you out there, I would start looking at that P&L to understand that snapshot of where you are right now. So looking at your revenue, looking at your expenses, understanding what those inflows and outflows would be. And I apologize. I realize that's ambiguous. It's just tough without pinpointing a specific industry there.
Yeah, that's fair. Okay, next question is from Anna, and that is, at what point should you bring in a CPA or outside help?
So I think the moment that your transactions are getting to the point where you don't have a full grasp on what all of your inflows are when they hit, what all of your outflows are when those hit, if your processes are getting messy and you are on a accrual basis, that's when I would recommend you pull in a professional, CPA, to help you with that cash flow management piece as a whole, but even to start getting in on that tax side and to help you understand what that's going to look like at the end of the year. So I'm not going to say no surprises, but there's hopefully less surprises.
It is nice when things become less surprising, that's for sure.
Yes.
Okay, this next question is from Party, and that is, how do bookkeeping and cash flow management relate? Do you have any bookkeeping tool recommendations? Great question.
That is a really great question. So my go-to, just because it's what I started out in 12, 13 years ago, has always been QuickBooks. Now, I would not recommend anybody be on QuickBooks Desktop these days. Online is definitely the way to go, for being a cloud-based accounting platform. Not only just so your team members have an easy way to access, but also because it's cloud-based and it has a pretty strong API. So we talked through the building blocks and how you can plug in tech to help with those. A lot of the fintech that's out there now, because QuickBooks is a big player, they'll easily integrate with QuickBooks itself. Now the cash flow management piece, that is the bigger picture of it. And actually, Avery, will you remind me at the end of that question? I want to make sure I'm addressing this right.
It was, how do bookkeeping and cash flow management relate? And do you have any recommendations on bookkeeping tools?
Got it. Okay, so how they relate. Bookkeeping is that tracking piece that we talked about in the definition of cash flow management. So think about it as the data entry, and that's where you can utilize the tech to automate it wherever possible, get it in the books quickly with high quality. Whereas cash flow management is like zooming out from that. Okay, bookkeeping is the data entry, you've got it in there, then you need to analyze it, then you need to optimize it. Optimizing is where the cash flow comes in and you're truly pulling in everything that's been done up to this point.
That's helpful. It almost tells you what to do with those numbers and what that means to your business.
Exactly. Yep.
Okay, great. This next one is from Dr. G, and that is, what are your thoughts on invoice factoring to help with cash flow?
Invoice factoring. I'm not sure what exactly they mean with this. Avery, is this something you're familiar with? I want to make sure I'm
I
addressing.
am not. Dr. G, if you have any follow-up to that, that could give some color, let me know. I'm checking out the chat here. And I'll follow up on that one if Dr. G, if you follow up. This next question, I think we've sort of touched on this, but it's asked in a different way. Okay, so factoring companies basically buy your invoice.
Ah, so for collections. Okay.
Yeah.
Huh. So I have mixed feelings on that. I think it's going to be a little different for everyone, but I will say if I were in a position where I were looking at books and considering if it made sense to basically sell off bad debt, I would think about, okay, what is the time commitment for me to go in and manually try to collect on all of these? Cool. Well, what does that time mean as far as value? And you can potentially even translate that to a dollar value. Okay, what do I typically make on, let's just say, an hourly rate? Cool. Well, let's multiply that by whatever we think it would take to address these collections. And if you're doing collections over time, you can generally understand how long it'll usually take you. So you should kind of have an idea of that trend at this point. If that dollar value is more than what you're owed right now, yeah, it doesn't make sense for you to go in there and actually chase those down. I would say at that point, you need to turn around and talk to somebody and consider having them go through and do that collections. Because even if you're receiving less than the total that's owed to you, at least you're still getting some of that money versus none of it at all.
Okay, and just to add even more color to that, Dr. G says you can submit your invoices to a third party to be paid at the time, which you mentioned. They have government invoices and payments in account receivable of up to 6 figures out 30 to 60 days. Is there anything you want to add, just knowing those additional details?
No, I don't think
Okay.
there's anything too major.
Okay.
Thank you.
Okay, perfect. This next question is from Sita, and that is, can you anticipate or forecast when your incoming cash will be slow if you properly manage your cash flow?
If you have been in business for more than a year, then it's usually easier to do that. But without the history, it's going to be pretty hard because you won't have your specific trends in place. Now, if you have been in business for less than a year and you're still trying to get some type of insight to that, I would say do research on your specific industry so that you can at least get some big picture ideas of trends and just understand that you may have some variances getting started there.
Okay. This next question is, how do you prioritize your expenses? What should be paid first versus what are things you should save or wait on?
Oh, that's a really great question. I think it is very important to understand what keeps the lights on for your business? What are those bare minimum expenses that you have to pay? Maybe it is your utility to quite literally keep the lights on for your business. Or maybe it's a liability insurance that you need to pay. I think it's really important to ask yourself what these priorities are, and then start to look at areas where you might have more flexible spending. And I say that thinking about something like utilizing working capital, um, utilizing but not abusing vendor relationships. And I say that that absolutely comes with you needing to come in and be very upfront and communicate. So let's say your cash flow's tight, you've got a big bill to one supplier, and you've already paid all of the necessary expenses in your business. So hitting those priorities to basically keep the lights on for your business. If you know you have a really good relationship with the supplier, it can be good to step forward and be a little transparent with them and just say, hey, look, we're kind of in a tough season right now. Sales have slowed down. I wouldn't make a huge thing out of it. But if there's any way we can have some wiggle room on our terms, that would be really helpful to our team. Maybe you could even throw in there how it'll help you now so that you can purchase more from them in the future. But I think it's just a matter of looking at those priorities and maybe where you can utilize good existing relationships.
That's very good advice. And we had another question come in that was very similar to that, Christina P. So hopefully that answered your question. And just as a recap, today's conversation is part one in the three-part financial fluency workshop series. So if you have questions about inventory or purchase orders, or the power of alternative funding, things outside of venture capital, please keep an eye on your inboxes because we do have 2 more workshops in addition to 2 downloadable resources. So we are putting together as much as we can for you to be profitable as quickly as possible and as long as possible. Just alluding to some of the questions that we got today. But Kristen, thank you so much for joining us. And if you all do have any questions or want to learn more about Settle, I popped a link into the chat and I can go ahead and pop that back in there. And then this event is being recorded. I'll send out a replay later this week. And then you'll also, like I said, keep an eye on your inbox because we're going to have a couple more events and resources coming out. But thank you so much, Kristen. Thank you, the Settle team, who were able to help put this together. I really appreciate your time.
Awesome. Thank you. I enjoyed talking today. Thank you all.
Thanks, everyone. Bye.